Have you ever had a money or career question you really wanted to ask, but didn't know who to go to or just felt uncomfortable even bringing it up? You're not alone. Talking about money can feel intimidating, even scary. And that's exactly what I'm trying to change. That's why I created a free virtual coffee chat, a casual, no pressure 20-minute conversation where you can bring one thing you're wrestling with and we'll talk it through. No judgment, no jargon, no sales pitch, just clarity, ease, and a real answer from someone who gets it. If you've got something on your mind, don't sit in the confusion. Book a spot at limitfreelife.com and let's sip and sort it out. Hey there, and welcome to Money and You. I'm Michelle Perkins, your host. My search for more fulfilling work led me to career and business coaching, where I stumbled upon a game-changing discovery. Money issues often start with our mindset and habits. You see, our relationship with money is the key to overcoming those frustrating financial obstacles. As an entrepreneur, coach, and problem solver, I'm passionate about helping you create a great relationship with money. Because, turns out, that's the foundation for a limit-free life. Each week on Money and You, I speak with amazing guests about all things money, mindset, practical tips, and everything in between. We're here to give you new insights, education, and empowerment so money can be one of your favorite relationships. So join us for some lively conversations and let's transform your financial life together. Hello, hello, and welcome to this episode of the Money and You Show. I'm Michelle Perkins, your host, CEO and founder of Limit Free Life, and I am really excited about our guest today. We're going to talk about a topic you probably don't hear a lot about on podcasts very often. We're talking about reverse mortgages with an expert in the field. And, here's a mindset for you. Sometimes when we hear a topic, we're like immediately attracted to it. Like, I've got to hear about that. And other times they're topics that maybe we haven't heard much about or we have preconceived ideas about. For example, reverse mortgage information is something that I'll worry about, in 40 years. So I want you to think about that because the whole purpose of this show is to give you a broad financial education, which is a huge step toward financial well-being, so that you can have this arsenal of ideas for the future. So whether it's retirement planning or just, building this foundation of knowledge so that as things come up in life, you have information, you have the ideas that you can go then learn more about or talk to somebody about. And so I think it's really important, even with the topics that you may not have necessarily a huge interest in right now. Maybe you're on the younger side and you think this is for the future. Please listen in. Please just get to know what's out there for you in the finance world, because you never know when you might be more interested in something. And if at least that seed has been planted, you can go and draw from your wealth of information. So I think this is going to be a really interesting show. I actually can't wait because there's a lot that I want to know about this particular topic. So without further ado, I'm going to introduce Laura Phillips. Laura Phillips is a licensed reverse mortgage specialist with over 25 years of experience in real estate lending, dedicated to guiding clients through the HECM and reverse loan process to ensure they make informed financial decisions for their futures. Serving all of Colorado, she specializes in FHA, HECM, and proprietary portfolio jumbo reverse loans, helping her client enhance cash flow and preserve their retirement assets. Laura believes that a home is more than just a house. It's a significant financial commitment, and she is committed to helping families enjoy their best years in their homes. And Tony, I'm excited for you to hear this show because you are a new homeowner and this will be interesting. So welcome, Laura.
Well, thank you so much for having me on board, Michelle. I'm really glad to be here.
I'm really glad that you are here.
Yeah. And let's start out with, what is HECM? What does that stand for?
Thank you. I could barely say it. Yeah.
And it's pronounced HECM, which sounds like you're coughing up something that you don't really want to cough up. But it stands for Home Equity Mortgage Conversion.
More interesting now. Okay, great.
So, and that's actually what it is. It's taking your equity and converting it so that you can use it. It is a loan. we'll start there with it absolutely is a loan. It's not a scary item any more than any other loan that you do is, to be honest with you. I think it's misunderstood. And there's a lot of urban myth around it. So let's dive in, ask you some questions.
Yeah. So I love this. And I'd love to know, given your background, what drew you to this particular, area?
I've been a mortgage lender for, oh my God, over 30 years, maybe even closer to 40, because my daughter's birthday was today.
Oh,
she grew up with me doing it. So we're going to go 40 now. And I looked at the picture you had of me, and I think I'm a little bit more gray now than I was before.
Okay, we all change our hair color. That's fine.
So I got involved with this. Probably my first one was about 15 years ago, and it was kind of just a fluke. A gentleman called and said he wanted to do a reverse mortgage. And I thought, okay, I'll do that, but I have to go read about how to do it. And he wanted to do it because he wanted to buy his wife a dream trip. She had been diagnosed with a terminal illness and was still well enough to travel. And he wanted to use his equity to give her a gift that she would remember in those final days when it wasn't so much fun. Yeah. Gives me goosebumps to this day to even think about it or talk about it. But as I moved through life of being being a mortgage lender actually for about 40 years, I found that this is an underserved and certainly misunderstood product. And I can speak to seniors. I'm right there with you. Mm-hmm. And I think that there's a comfort zone for a lot of seniors to go, oh, this person has been through the life changes with me in some form or fashion and understands my concerns and fears now. So it's easier to talk to seniors, being a senior.
Yeah, I agree. But I also, like I said in the intro, I think it's so, what we don't know, that's a problem. And I think in the finance world, it's so important to have more information than you need in the moment, just so that you can draw from it at some point, or at least remember, hey, that's a thing, maybe that would help me at some later point. Right. And I think it's very interesting that I hear so little about this. And I also will tell you my bias, because unlike many things in the financial world, I've not necessarily heard a lot of negatives, honestly, but I've also not heard a lot of positives or anything. So you assume, well, this must not be the greatest way to go. So how do you address that?
Well, I think a lot of people don't know about it, and a lot of financial advisors are very hesitant to discuss it. Okay. So that is a lot of why people don't know about it. And then if they were to go to, say, their church or their friends in a social group and say, hey, I'm thinking about getting a reverse mortgage, the comment that they're going to hear is, oh my God, don't do that. Or, and they have some kind of war story. And that scares the average person out there from even taking their toe into the subject and even learning a little bit about it. So this is probably why you don't hear a lot about it. I mean, we all see Tom Selleck on the TV selling reverse mortgages, right? And there have been lots of other celebrities that have sold them over the years, but that's not going to get you to really pick up the phone and want to learn more about it, let's face it. In fact, you might even be more skeptical because you saw it on TV.
That's true. That's very true. And I think that's the big problem with the financial industry is there are some great products out there and great options for people, but there are also, some rather poor ones and, some really shady ones. And so it becomes very, very difficult to trust. And so, that's where I love that you're a mortgage broker for so long, because there's just a trust factor in that as well. And I don't know. I don't know. There are other things out there that I've had the same reaction that you just described around things. And 20, 30 years later, I'm sorry, I don't know more about them. Yeah, what they used to call whole life was one of them. And when I was first coming along, people talked to me about it, and it was expensive, and I didn't get it, and it wasn't ever explained well. And so I just, I spent my whole life really almost looking for evidence that it was a bad thing, because I didn't have it, and I didn't. And oftentimes now it's sort of transformed a bit, and there are all kinds of new versions. And I've had a number of people come on the show and talk about life insurance options that I never really gave any thought to. So that's a mistake. We want to at least learn.
Absolutely. And it is a mistake to not at least inquire. And I fully believe in educating any client that comes to me and talks about reverse mortgages, whether they do it or not. They're going to have a good understanding and education of what it is and what it can do. And I always talk about the good, the bad, and the ugly. I just want to get those elephants out in the room and let's talk about them and see if they fit, if they absolutely fit. So in the beginning, this loan's been out since the Reagan era. So most of us remember President Reagan, and he and his administration was one of the first to get this loan on the books and get it into the federal HUD product. And it is a federal program. So, but there was a lot of not great thought into ramifications if we did this or we did that. And I'm happy to speak about some of the myths if you want.
I would love to hear the myths. I'd also just like an overall description of what the heck it is for people listening.
Absolutely. What the heck is a HECM? I've often thought about entitling that as a blog post. So what is a reverse mortgage? Well, first of all, it's been out in the United States since the President Reagan's era. And I guess I should go back and actually look at the date of his administration, so that I don't just say that. And it was designed the original one was designed to help a widow who had 5 kids, husband had died, and had no way to live in the home and continue to raise her children. But they had equity. They had equity in the house. House must have been paid off or free and clear at that point. I don't know. Mm-hmm. So a savings and loan came up with an internal program that would allow her to tap the equity, and she did not have to make any payments if she didn't want to. Now, that's a plus and a minus. The minus to that is that the loan is going to grow. The balance is going to grow. But this allowed her to stay in the home and raise her children as a single mother of 5 children. Mm-hmm. So that's how this loan got started. It's in almost every, I call us the first world nations versus the developing world nations. So it's in almost every country in some form or fashion to help the seniors use their equity to allow them to live a better life, whether it's to upgrade the home and make it more comfortable, providing the ramps or grab bars that you might need, mm-hmm. or to just be able to pay for medical care. So wow. It is a loan that allows you to tap your equity. You need to be 62 or older for the official HUD product. Okay. If you have a higher loan balanced home or a higher value home, there is a proprietary loan that will allow you to go to 55 or younger. But let's just talk about the main one because both of the programs use the same guidelines. So you go in and do a loan application. We do an appraisal. It's an asset-based loan. So we're going to be looking at how much asset you have in your home value, and then you're allowed to take a certain percentage out. So right now, remember the old logarithm tables when you were in high school? Yep. Very similar, or insurance things. We have a chart, and it is age and interest rate. And so you go down to your age, over to the interest rate, and that's going to show you how much equity, literally. We had the computer do it for us now, but the old days of manual, that's exactly how we did it. And that gives us how much equity you can tap of your home. So you're not allowed to tap 100%. I think that's a misconception when a lot of people talk to me. It's like, oh, this is all I get? They're thinking that they can take 100%. And no, they don't
just
want
for their own protection, really.
Absolutely for their own protection. And that number has gone down since the beginning of time to about 45% or so for somebody who's 62. Okay. And if you get up to 90, and I haven't had a couple of 90-year-olds use it, then they're getting close to the 70s percent. And that is to protect. So nobody wants to own your home. You want to own your home. You don't want to go upside down. You don't want it to go into foreclosure, mm-hmm. or a bankruptcy type situation. So that is to protect the client. You bet.
Yeah, very interesting. So you can borrow, whatever percentage you're allowed to borrow. Right. And how does it work? So the qualifying, how does this work in terms of accessing these funds?
Well, it is still a loan. So it's going to be a loan process, just like you've done your whole life. Whenever you did a refinance, you bought a house, you did a loan. Very few people are lucky enough to pay cash, and good for them that they can, but most people end up getting a loan. So you do a loan application. You do have to take a class. This is usually what terrifies most people. Oh my God, it's like school again. And yes and no. That's true. The class is offered by a third-party HUD certified agency. So they are all over the U.S. They're with both your county and 800 numbers that you can call. It is done by the telephone. It's about an hour long. They want to make sure that you, the senior, and it's hard to say that when you're 60 years old or 62
exactly.
You're senior, but you, the senior, understand that it is a negative amortization loan, and that's a scary term. Really, the reality is yes, the loan grows in balance if you're not going to pay on it. Banks don't lend money for free, and they want something back. And that's how banks make their money. So this is designed that you do not have to make a payment if you don't wish to. It's the only loan I know out there in my lending years that would allow you to make a choice, make a payment, make a partial payment, never make a payment.
Okay.
And then, but again, like I said, if you don't make the interest payments or balance payments either, then the loan is going to grow. I haven't ever seen anybody say, "Oh, I don't think I like that." Particularly as they're aging, then most people at that point that talk to me are on some kind of fixed income. They don't have any other way of generating any additional income. And expenses are getting harder as we get older. Basically, there's more medical costs that involved as we age, and they weren't necessarily planning for it, so they're okay that they don't have to make those payments. So once we've done this loan, we get your class done, this little class that says, yes, they understood what's going on. The only way you're going to be able to lose the house is if you don't pay your property taxes or you don't live in it. So those are the two biggest requirements that are cause the home to be lost, for lack of better words, foreclosure, the bank takes it back. And once the client understands that, they've gone over all the details. Some agencies ask for a budget, others don't, but that's really the whole situation. Then we do the loan process. We get the loan information. It's not a hard credit situation. We want to make sure that you can afford to pay your property taxes and your insurance. So we are looking at that. So most people's Social Security would cover 1/12 of that payment each month if they didn't have to make other payments out of their retirement funds. So that's what we're looking at. And if you can make that, then we are able to get an appraisal. We judge to see how much remember the little chart, we're going to see how much you actually get. Then we go to closing. So the whole process, if it's a good year and no gremlins are out there, like Amazon going down today and closing down a lot of things, then we are able to close the loan in 6 weeks, start to finish. Or less, yeah.
And then you're funded the full amount, less.
You are funded the amount that you're allowed. And now if you have a mortgage against the property, we're going to take that out of that portion that you're allowed. So if you're allowed to have, say, 46% and you have a loan balance, then we want to make sure that we're paying off the loan balance. In a good portion of cases, people are just happy that they no longer have to make that anywhere from $1,500 up mortgage payment, because that's going back into their pocket. And the amount of relief and sigh when they hear that and see that on paper and understand that, again, they never have to make that payment, it's like, oh, this is huge. Why don't more people do this? Why don't people understand what this does? Because it's a huge benefit.
Yeah. Yeah, that's very interesting. And so the negative amortization is the idea that, in a normal loan, you would be paying down principal and interest. And so that exact same thing is happening, but it's adding to the loan.
Correct.
Okay.
And that has a lot of negative thoughts, because when we had ARMS out there, and we had the collapse of the industry back in 9 and 10, and also just the beginning ARM products that came out, they went into negative amortization because of thoughts that didn't think it through to make it a better product. So this product, I said, product's been out for a long time. There have been a lot of revisions, and I do find it to be a kinder and gentler product than it was in the beginning. And so I'll tell a lot of people, it's not your grandmother's reverse. you know.
Okay. Yeah.
I mean, they thought about what happens to the spouse. Well, in the early days, they didn't put the spouse, which was usually the wife, onto the loan. So when the husband died at that point, she was out on the street. And again, aha moments, as I say. Yeah. So they have made it so that if the spouse, and you can have a spouse that's not even 62 years old and do a reverse mortgage. There are protections out there now for the spouse that were not put into the original loan product, which I think helped it grow in its negative thoughts. Of course, the other one was, and I touched on it briefly, was people, when we first gave these loans out back in the day, we gave them 75 to 80% of their equity. That's a lot.
Yeah.
Then if you put negative amortization on top of that, the house was going to go upside down to the loan. Thus, the loan was more than the house was worth. And the third thing was we didn't check to make sure they could make their property taxes. So a lot of people lost their homes because nobody checked to make sure they had enough income coming in to make the property taxes.
Right, right. So, very interesting. And so what happens in a case where somebody lives a very long time and have never made a payment? And can you exceed with this loan the equity or can you go as far as you can go with this and find yourself?
You can. Okay. And a lot of it depends on your age. So if you're going to get a reverse mortgage when you're 62 years old, and you live to be 90, because we are living longer, and we're having to plan for another 30 years of, quote, retirement, unquote, then yes, you're probably going to see that house go upside down, which means the house is worth less than the loan, and somewhere in your 90s. Absolutely. And it's just basic math.
Right.
It really is just basic math at that point. Most of the homes that I have helped people with or loans with are looking at it in their early 70s, and I'm not really predicting out an upside down situation. And we can look at that on graphs. When you work with me, I'm able to show you lots of graphs and play what if. We get on, we share my computer and we go, what if the interest rates go up? What if the interest rates go down? What if I take more out of my home? I have a line of credit, very popular product with a reverse mortgage. What if I take out this much each month or each year? How does this affect the loan and affect the value of my home? I want to make sure people really understand what's going on.
Right. And, of course, you could also sit down with somebody and maybe they can't make a full payment, but look at what a partial payment will do.
Absolutely. And we can do that. We can show interest payments. We can show paying off this line of credit. It's the most popular loan out there. There's two options, a line of credit, which is we're probably mostly familiar with from having gotten seconds on our homes. Right. Exactly the same way. It works exactly the same way, except that it doesn't get turned off as it could and did during the banking collapse back in 9 and 10. And the other one is a fixed rate. I would say probably nationwide, I'm thinking of the number off the top of my head, it's probably 95% of the loans are lines of credit, because that line of credit grows in its usage amount. So it makes it quite popular, particularly if you don't need to use it. Right. And we have models that the lenders have provided us that allow us to show, okay, well, this is how much your line of credit is, and maybe you can still make interest-only payments. That keeps your loan balance down.
Right.
Lots of different ways to look at that. You bet.
Yeah. And I think if you have an expert like yourself, looking at it with somebody and all the options, that gives you comfort too, because you can have choice. Choice is always a good thing. So if you, and the person obviously can take less if they want. If they're allowed to take X amount, they can certainly take a lesser amount if they prefer, correct?
Yeah, absolutely. In fact, in the changes that came out when President Trump was in his first administration, they lowered how much you could actually tap out of your home equity. So that's down. As we said, we got a haircut. And the other thing was they wouldn't allow how much you were allowed to use the first year. So if you were allowed $200,000, these are just going to be numbers off the top of my head, not real, right. Then you might only be allowed to tap 50%. It really is more like 65%, but I can do math really well at 50% in my head.
Yeah.
So 50% the first year you would only allow to get after paying off any other closing costs, and if you had a mortgage or not, you would only get 50% of that money. The second year you would have the balance that you could use. Now, again, if you don't use it, it grows.
Right, right. Okay. Wow, very interesting. So let's talk about some of those myths, some of the things that you hear out there from people you work with that maybe are not true things.
Well, a lot of people say the bank owns your house. And, well, the bank owns your house if you think of it that way from the very first loan you ever got. That's
right.
Not true. You are always entitled on your home. You own your home. It is yours. It is a lien. It is a mortgage. It is a lien against the home, but it does not mean the bank owns your house. Of course, we've talked about, the wife was out on the streets. Well, we have that protection. So that's a big one that I hear a lot. Or how, they went into foreclosure somehow. And usually if you delve into what was really going on, it was probably that the person didn't pay his property taxes. He forgot to pay them. So you got to remember that now you're responsible for the property taxes. There's no escrow account. You can get one. It's called a LISA because we have to have our own name for everything. So it's called a LISA, which is a loan equity set aside. I believe that's what all that means. I'm not sure that I've only seen one LISA used. I had a gentleman that required it because he didn't want to keep track of remembering to pay the taxes and insurance. And he asked for the property taxes, and he keeps his own homeowner's insurance up on his own.
Okay.
So those are kind of the big ones. The other ones are there won't be any equity left for my children. So that's a big concern. If you want to leave your house to your kids, reverse mortgage is probably not a good choice. I won't say not a good choice, but it may not be the choice you want to think about because it's going to have a lien on it when your kids inherit it. And they would have to pay that lien off to be able to have the house in some way or another. They're going to have to go out and get a loan of their own. So for those that have felt like they've always wanted to, from generation to inherit the house from mom and dad or grandma and grandpa, then this loan, let's really talk about it. I think it's a conversation you need to have with that reverse mortgage person to make sure you understand what's going to happen.
It's a really interesting question, because what can also happen is that the parent needs another place to live if they're not going to keep the house, which can actually be much more expensive. So, where does that money come from? I mean, it's a kind of a bigger puzzle to sit down and go through. That was my feeling that must be one of the big drawbacks is not being able to leave a house free and clear. But I would imagine if somebody has the house long enough, though, that even with the reverse mortgage, they still have some value if the person were to inherit it or sell it or whatever.
In most cases, like I said, if you start out getting a reverse mortgage in your 60s and you look to you're going to live to the 90s, which right now is probably a realistic number for us. Medicine is doing better about keeping us alive. We're being healthier, all of those things.
Right.
Then, that house is probably going to be upside down. But if you do something later on into your retirement years, a lot of people don't retire at 62 any longer.
Yeah.
So I would say there is value in the home. It's just not as much.
Yeah. Right.
And that's why the haircut came, was to make sure that, like, again, banks, I've done lending for a long time, plus the gray hair. But banks don't want your house. They're not in the house business. They're in the money lending business. And so they don't want to take over a bunch of foreclosed properties. And they already had a really bad experience once. So they're pretty sure they don't want to do that again.
I was going to say, when I watched the banks take over not just houses, but whole developments, and things, I honestly didn't understand. It seemed like a giant burden for them and one that they couldn't really deal with. So I was curious, actually. That's an interesting point you brought up. Like, did they learn? Like, would they do it that way again? I don't know. But
one would hope that we learn from our mistakes, whether we are an organization or an individual. Absolutely, one would hope. And one of the ways that they found to help them being the lenders, the people behind the curtain, as I say, they have asked, or they didn't ask, but it was a decision that HUD actually made in reviewing how come we had so many foreclosures, what was going on. Well, there's a whole bunch over here in the early days that didn't have enough money to pay their property taxes. Well, gosh, maybe we never asked if they could. Thus the aha moment and the correction to the loan product. Same thing with, well, if we gave them 75% of their equity, maybe that wasn't the best idea either. So it is designed. It is actually a much kinder product designed to protect the senior now and going forward, so that it's not going to be such a headache for them or their heirs.
Yeah. Okay. Really interesting. And when you were saying initially that like financial advisors might not be recommending this or discussing it, why is that?
Well, I think there are two things. One is not knowing much about it. So, and the other was in their early days, FIRREA, I think I'm pronouncing that correctly, is their governance of how they can act. And for a long time, FIRREA would not allow them to talk about reverse mortgages. FIRREA has since backtracked and said, no, that you can talk about it. And a lot of it is because we as an industry have to make sure the client is well educated. So that education and the class coming from a certified HUD counselor helps say, I'm not trying to educate them. I mean, I educate them so they can pass the class, right? That's my job, to make sure that everybody's really comfortable with what's going on. Okay. But the financial advisor is not on the hook for saying maybe not having provided enough education for the client. Mm-hmm. So I think a lot of advisors are looking at it and saying, oh, this isn't such a bad product. After all, they are well educated. There are a lot of checks and balances involved. I should, feel comfortable with it. But they don't know. They just don't know. Yeah. I wish they did. I mean, I wish every financial advisor in Colorado would call me and say, how do you do this? What's going on? Because it's just another tool for them to work with retirement for their client.
Yeah, and it's kind of interesting because it's actually advantageous in my limited opinion for them, because then people aren't taking their investments and cashing those out. So in a way, it's a little symbiotic relationship there. It could be anyway. Go ahead.
No, I fully agree. Yeah.
I was going to ask you too. So can I go directly to my bank for this? Do I go through, like, you're a mortgage broker. So does that mean that you're going to be shopping around for the best product for me, best interest rates, all of that, if I come to you for this?
I'm not sure banks offer them. For a while, a couple of banks offered them, but then got out of the mortgage business altogether.
Okay.
I would say you're not, now banks do internal loans. They like to do lines of credit.
Right.
Seconds. They're pretty good with that. If you are a high net worth person in a private banking scenario, they might offer something like that, but just the average person coming in off the street, they would try to move you or encourage you to look at a line of credit through a second. The difference between the two, because the people say, well, why don't I just go do that just real quick, is the line of credit with the bank requires a payment.
Yeah.
Can be turned off if the economy dictated that they wanted to do that. Mm-hmm. So they have the control to turn it off. And that a lot of people experienced that back in 9, 10, and 11, where their lines of credit were turned off overnight. So this loan doesn't require a payment and cannot, by the contract currently, be turned off. Now, they can rewrite contracts or rewrite the rules, but that's the way it stands right now. So how are you going to find a reverse mortgage person? You need to go find a mortgage person.
Okay.
Not all mortgage people do reverse mortgages. Mm-hmm. I would definitely ask some questions about that when I'm talking to people and kind of vetting. I mean, it's like, if you needed heart surgeon, would you open up the Google, find my best heart surgeon next to me and go to the first one? Probably not. You're probably going to interview and talk and decide who's a good fit with you, personality-wise, talk-wise, comfort-wise, and also expertise. It's the exact same thing that needs to be done in looking for a reverse mortgage person, or for that matter, any mortgage person, to be honest with you.
True. Yeah, very true. So I know you're licensed in Colorado. Does that mean you can do this for people in other states? What does that mean exactly?
I can. I currently carry a license in California, Florida, and Arizona. So you bet. People can call me. I've done loans in Arizona. I have not done anything in Florida or California. A couple of false starts, you might say. Just wasn't the right timing for the clients in both of those places. And that's it. It is 100% timing and your needs. You look at, and I like to make sure that people consider, well, what if I do this now and I pass, how that's going to affect my spouse? And what if I do this now and I have a lot of medical stuff? I want to make sure, I don't want to wake up in the middle of the night and have a panic call from anybody. I want to know that we both are sleeping well.
Oh, for sure. And that's one of the things that I was really impressed with you, because you are covering all those bases, which is a caring kind of person that I like doing business with. And I've been so excited about the guests I've had on the show, because I feel like, for whatever reason, the people who are coming on the show who are attracted to the show are also heartfelt, solid, qualified, but also good people who aren't selling products to sell products.
Right.
So I just really appreciate that. There was another question that I was just going to ask you. So if you decide to sell your house and you have the reverse mortgage, going, I'm assuming that looks like just what I would think it looks like that. You sell the house and that gets paid off. Is there anything more to it than that?
It's exactly how it happens. And that's true if you you inherit the home. It's a part of your estate. So it's true if you pass away and you've given it to your children as an estate. And so now they have to deal with it. It is 100% you pay off the loan. And you either can keep it at that point, or you pay off the loan and you move. So a lot of seniors get a reverse and then realize they want to move closer to their children, grandkids, for varying reasons. And so we will do that. We will take care of paying off the current reverse mortgage, and the money that they have in between paying off that reverse and the equity in their home is now their equity. They have it in a cash at closing kind of situation. We'll take that and then look at home values, where they're wanting to move to, and use that money to use a reverse for a purchase. So they come back in and they put a reverse on with a lump sum to the house. And again, they're back into no mortgage payments, which is their choice.
Wow.
So I saw your curiosity about what is a reverse for purchase.
Yeah, interesting. Okay. And how does that impact your credit score? Does it do anything to it if you're not paying on these loans that you have? I've done dozens and dozens of these things. I mean, I won't say millions because they have to be timing. But I've never had anybody say that it affected their score. I had one family that tragically lost their home in one of the fires we had here in Colorado not that long ago. And we are finally finishing up the reverse and the build out of that new home and paying off the current reverse to get a new reverse on it and take some of the equity out. They funded their own rebuild of that home. And there's no effect on the credit score at all, to my knowledge. I mean, I see their credit report. We do pull a credit report. If you've been in bankruptcy within the last 2 years, they'll probably want to put that LISA, that funny word, for an escrow on, because they're concerned that, again, they don't want to own your house. They want to make sure that the property taxes and the homeowner's insurance are paid and taken care of. And if you have an HOA, usually that's on you, but you could put all three of those into that LISA. Yeah. So I don't think it affects it at all, personally. Okay. This is great. This is so interesting. And I feel like, I hear all the time, people are so worried about, their later years. I mean, I was just talking to a girlfriend yesterday and she, was saying, I don't own my home. I don't have long-term care. When you don't own your home, this obviously doesn't apply, but assuming you do have a home, but all other things, being kind of similar in terms of, either not having things or not having enough money saved, this is a nice fallback in my mind.
It is. Yeah. It is, definitely. I think probably the thing that my generation, I assume your generation or behind me and that generation that's coming up, is worried about am I going to have enough money to make it to the end?
100%.
And the end is 30 plus years after you, quote, quit working a full-time paycheck job.
Mm-hmm.
And in many cases, sadly, the answer may be no, but you have this house and you have equity. And we talk about it. It's very hard to punch a hole in the wall and pull the money out.
Mm-hmm.
The only way you can do it is through a loan. One loan requires that you make a payment. It's kind of counterintuitive in some cases. And the other loan says, no, you don't have to make a payment, and we'll give you the money, a certain amount of the money that's there. So, yeah, I find them a product that people should really look at some point in their senior years.
Yeah. Yeah, super interesting. I love this. I think this is fascinating. So tell people, if you will, how people can get in touch with you and have, is it okay to just get in touch with you and have a conversation about this?
Absolutely. Even if I'm not licensed in your state, it's okay to call me and ask. I do have a kind of internal referring business. I don't refer any money. I don't get any money to refer, but I have a company that I've had good success with for referring out to the states that I don't work with. They were friends and they had their mothers live in those states, so I got good feedback.
Oh, wow. Okay.
I really feel good about that in doing that referring if I need to. But people can reach me on my telephone. You call me. Leave me a voicemail. You can set up an appointment to have a discovery call, for lack of better words, a cup of coffee conversation. And we just kind of go from there. And so my phone number is 303-817-4611, and that's my cell. You're going to get me. I don't have any automatic people talking for me. You get my voicemail that says, hey, I'll get back to you. And of course, you can always go out to my website at Laura Phillips, that's my name, .com. And Phillips is with 2 L's.
Okay. Yeah, that's great. And actually, I just found you on LinkedIn, so you're there as well.
Oh, yeah, I am on LinkedIn. Yeah, thank you.
So
I didn't even think about that. Thanks.
Yeah, no, I just put a connection request out to you, so thank you in advance if you would accept.
I will.
So, well, Laura, I think this has been fascinating, and I'm so glad to know more about it. And I just feel like this is what empowers people, and especially, for women. I mean, it is a reality. Many of us will, be alive after our partner is not, and so. Or there are so many single women too, owning homes, and partners, aside, this is also for men. I mean, I don't know why it's not the 1950s anymore. So that whole conversation about this being for older widows, I don't know why I'm even having it right now. But anyway, it's where my mind went. It's great for whoever needs it, basically, who owns a house. And I think it's a great thing to add into the equation when you're, I find when you are stressing about how am I going to, live decently or well, or whatever you're wondering to yourself in your older years, this is something else that can give you some security and an option.
People are very relaxed when they finally get to the closing and say, oh, it's done. The money's in my pocket now instead of sending it to the bank. I don't have to ask my kids to help support me in my later years. I mean, it's just such a huge relief to people to consider it. It's a good product.
Okay. All right. Well, Laura, I really appreciate you being here, and I appreciate all your wisdom. And I love it when people have done a job in an area like you have for so many years. You've kind of seen everything, and, like you said, the good, the bad, and the ugly. So it makes you a really great person for people to talk to and to get information and, frankly, get loans with. So
thank you. I appreciate that.
Great.
Like I said, even if I don't do a loan in your state, I'm happy to talk. So.
Okay. All right. Well, thank you. Thank you.
Thank you, Michelle.
Today. Thank you for your time and your sharing all your wisdom. And audience, thank you. Thank you for joining us on the Money and You Show. We love it when you watch or listen. So we're on all the podcast platforms. We're on the Limit Free Life YouTube channel. And please share this show with anybody who you think could use it. Share it with your parents. Share it with your friends. I think it's a lot of really valuable information here. And we love it when you rate and review the show. And You can reach me at Michelle@limitfreelife.com. Check out limitfreelife.com and see some of the offerings that we have and the information. And there's a lot of old blogs and a lot of old podcasts. And so you can play there if you'd like for a little bit. I would love that. All right. And Newbie and Go, thank you so much for all your help in producing the show. And we'll see you next week.